Well, welcome to LivNow's podcast. I have with me today Mark Maimon from the Maimon Group and NJ Lenders joining us today to talk to us about a bridge loan program that the Maimon Group has created specifically for LivNow Relocation and our clients. Thanks for joining me today, Mark.
Yeah, thank you, Maureen, for having me.
Well, I'm looking forward to sharing some information about the bridge loan program that we have partnered along with you to create for our clients. So why don't we just start by saying why bridge loans are important for senior living, and I can address that by commenting that as everybody knows, there are times when a senior just does not want to live through the process of selling their home and having realtors going through their house and strangers and everything else. And they'd rather just move into the community and worry about that all later. A bridge loan program will accomplish that for them. If they are waiting to get the equity out of their house, they can utilize a bridge loan program to move into the community and then sell their home. There are also other reasons to use it though, aside from that, and it could be because perhaps they want to fix up their home so they can get maximum dollar from it. A bridge loan program will accomplish that for them as well. And they can also use it instead of liquidating assets. Maybe they have plenty of assets to use to move into the community before they sell their home. And they're not ready to sell their home. But as we all know, now is probably not a great time to do that. It would make more sense to tap into a bridge loan. So for a variety of reasons, the bridge loan program can be very beneficial to our seniors and to the communities that we serve. And that's why I've asked Mark to join us here to talk a little bit about the program that the Maimon Group has put together for LivNow. So thanks for joining us, Mark. And why don't we just start by just talking about the program that you did create for LivNow and how it might be different from the programs we've seen in senior living in the past.
Sure. So we, first of all, appreciate coming on today and talking with you and your community. We've really kind of tried to tailor this product to the needs of seniors. And so a couple of the main differences that differentiates us from traditional senior bridge loan options are, first of all, the way that we qualify seniors is not necessarily just based on conventional means where you have to show a certain amount of income to get a certain loan. We have some unique underwriting criteria where we can qualify based on income as well as assets in the bank. So for seniors, that's usually in the form of retirement accounts where we don't have to leverage those assets, but we can use them as a way to increase the amount of income that we need to qualify on the loan application. So it's a great way for seniors to be able to qualify for more than they would normally. And then one that you also touched on briefly is that we also don't have restrictions that the money physically has to go directly to the entrance fee or other costs associated with moving into the community. So where that can really benefit seniors is what you mentioned, in that the funds can be used to potentially clean up the home, either decluttering, painting, any minor repairs that need to happen or major ones that need to happen, so that you can, as a senior, be able to sell your home for top dollar. And that in and of itself could more than cover the cost of bridge financing. So it's a really unique thing, whereas most bridge products require that the money can only go toward funding the entrance fee or down payment in that case. We don't have that restriction, and the client can use the money for anything that they choose to, whether it be renovations, covering living expenses in the meantime, or anything else that they choose to use that money for.
Yeah, I love that part of it, Mark, that flexibility, because I can really see that for the assisted living memory care communities, when the adult children maybe are moving a parent into a community, they need the equity from the house, but they would rather fix up the house to get top dollar for it. And with your bridge loan program that you've created for LivNow, they can take advantage of that. They can use some of it to move mom or dad into the community. They can use some of it to fix up the house, get it sold, and without the stress of having to take a lowball offer on the home. So I really love that part of it. Another question for you though is, do you have a maximum amount of money that people can borrow on the bridge loan?
We do not. So there is no cap. The largest one we've had approved was $80 million it was not in a senior situation, but I don't think too many of them are going to come in larger than that. So I think we can safely assume that there's really no maximum. As long as there's enough value in the home, that's typically the biggest criteria for how much a client would be eligible to borrow.
Awesome. Talk to us about fees and, something, about the cost associated with doing this sort of product.
Sure. Well, with any short-term financing, if you look at it from the reverse perspective of a lender, when you're holding a loan, let's say for 2 to 6 months, which is the average of how long these loans are typically held, a lender's not really going to make any money on interest, right? They might make a little bit, but it's nominal compared to the amount of money that they're lending out. So it's very common for bridge loans to have points associated with them. Ours range anywhere between 0 and 2.5 points. They never go any higher than that. And most of them fall in the 1 to 2 range. But it's very common because banks really only make money off of the fees. They don't make money off of the interest. So that's why typically with any short-term financing, whether it be bridge loans or other types, you'll usually see those types of fees. And those are pretty standard with this type of financing. And
how long before they have to pay back that bridge loan?
Well, most of our programs don't have a payoff any less than the 30-year standard term of a mortgage. So in the event that a home's not selling and maybe a family decides that, you know what, I think maybe it's better to rent the property for a period of time until the market turns around, for example, they absolutely have the flexibility to do that. So there's really no restrictions on how quickly they pay the money back. It would just basically amortize over 30 years.
That's brilliant too, again, for that family that needed to take the equity from the house to pay for mom's care. Now they have that. And yet again, if the market's not doing so well, they could wait a while so that they're not, taking a big hit on the house if it happens to be a down market.
Yeah, and it's also, it helps manage stress levels, which is another factor for seniors. They're dealing with such a big change in their lives. If they have this, deadline, this looming deadline, 6 to 12 months later, which is how a lot of bridge loans work, it can add a ton of stress to that situation because, and it can force them basically to take a lower price, maybe an offer that they weren't all that thrilled with, that now they have the flexibility to not have to take that offer and maybe either wait for a better offer or maybe even wait out a market cycle and wait, a few years to sell that home if they choose. So really,
that's a great point.
Yeah, and our product is really designed to give people flexibility and peace of mind in many, many different ways that we'll cover today and beyond.
Yeah. Well, I'll tell you, I know several friends whose parents moved into a senior living community, and it was like a year before they even started to worry about the home. And certainly if they had this sort of program, like you said, they wouldn't have that looming deadline. They could take their time to do it when they wanted to. Is there a minimum dollar amount that you can take out?
Typically 100,000 is the minimum.
Okay.
Yes.
Oh, that's really good to know.
Yeah, and when you get below that, to be honest, it's usually more cost effective to not borrow such a small amount on a mortgage. There are other vehicles, personal loans, or loans against a retirement account that may be limited in scope as to what they can do, but on smaller loans, that might be a more cost-effective approach.
Yeah. Mark, talk to us a little bit about the customer service that our clients could expect to see from the Maimon Group and NJ Lenders.
Sure. So I think one of the nice things about this program is that it's run by a team of about 10 of us. So either myself or one of my senior team members would typically hold the client's hands to make sure that they always have someone there that's there to support them. We have more than one person attached to every transaction we do, so that if one person is out on vacation or some sort of leave, there's always somebody to contact. And we typically have 2 to 3 people assigned to each transaction. And for seniors, that's important. They don't want to sit around waiting for people to respond. And we really, because we're a smaller, tight-knit team, it's different than if you're calling a lender like through a call center where you don't talk to the same person twice. In our program, you're going to talk to the same people from day one all the way through closing. So we want to make sure that there's that continuity and comfort for seniors in particular that we feel are really receptive to that and really need that to feel comfortable moving forward.
Yeah, absolutely. That's a huge point, I think. And one more question for you too. How long does it usually take for this process?
I would plan for roughly 30 days. It partially depends on how we structure the transaction. But as far as preparing ahead of time, we can shorten that timeline a bit by getting a head start. So let's say you have a senior, for example, who knows that they want to move into a community, but the community doesn't have a space that's right for them quite yet. We wouldn't recommend to that senior to wait to start the application process, because they can get pretty much almost the entire way through the process, or they could actually close if they choose to,
Mhm.
in advance of that unit becoming available, so that when the unit is available, they're ready to jump on it right away. Maybe they already have, their loan cleared for closing. They've done any appraisals that might be necessary in underwriting, and they've already gone through that process. So it's 30 days from the time that the client initiates that process. Obviously, some clients may be a little faster than others to send us paperwork, so that timeline's a little bit plus or minus, but 30
Mhm.
days is about the average. But the more of a head start you get, the better of a position you're going to be able to move in quickly, so that you can secure the unit that you ideally want to get and not leave a period of time where somebody else might come in and get it instead of you.
Yeah, absolutely. And we do work with a number of communities that do have wait lists.
Mhm.
And so it's when it comes up, they got to be ready to move, or like you said. So that's really great to know. That's a great solution for that problem. What's the process like for the senior to inquire about this?
Sure. So we have a website, which we'll definitely distribute to you and any seniors who are interested in the program. So the initial inquiry typically comes on the website, where either the senior or a family member will submit some very basic information about the home that they live in and what they're looking to move into. Some very top level financial information, just to give us a frame of reference of what the scenario is that we're working with. And then we would typically do an analysis within 24 hours, or well, let's say one business day if it happens to be on a weekend. And then we would reach out to the family to discuss specific options that are available based on that senior's profile, or maybe a family member's co-signing. We can include that as well. So once we identify the options for the senior, then if they choose to move forward, we would send them a list of the documents that we would need to start that application process. But the process to inquire about a bridge loan is very quick. It's usually online submission within one business day. You have all the information you need as far as terms and structure of the loan that we recommend. And then it's up to the senior if they want to apply from there. But to just inquire about the options is a very quick process. We do not run a credit report initially until the senior is actually ready to proceed with an application. One of the questions on our questionnaire that's online is just generally speaking, if you know, is your credit in good shape? If
Mhm.
you know up front, we need to work around some credit challenges. We want to know that ahead of time, because that might
Mhm.
change the options a little bit, but we have some flexibility there as well.
Awesome. I can't think of any other questions offhand. Is there anything else that you would like us to share with our clients about the bridge loan program that we put in place?
Yeah, I think the big picture here is that we try to design this product so that as many seniors as possible can participate in it. So
Mhm.
that's flexible underwriting. That's the ability to use the funds as they wish and not just have to wire it directly to the community, which they can wire it to the community. That's fine. That's just based on the client's instructions of where they want the money sent. The timeline at which they have to repay the loan. All
Mhm.
these things are designed with the idea in mind to be able to reduce stress for seniors, and especially at a time when is probably a more stressful timeline in their lives in general, because they're going through a transition. So we really tried to create guidelines and find products that will alleviate some of that stress, and also make it more inclusive of more people, more general qualifications. One of the biggest challenges for seniors is that most of them are on a fixed income, so they might not be able to qualify for the amount of financing that they might need to accomplish this. So we have underwriting criteria that's flexible with that. So all these things are designed to try to support seniors in a transitional period. And also, for the sake of the communities, what that means is that more people will be able to join your community, right? Which is the overall goal. So capture ratio of people, there's more people that are going to be eligible to do this. And that theoretically should increase the capture ratios for the communities as well.
Absolutely. And I think something we probably didn't touch on yet is the fact that it doesn't cost the community a penny.
No, absolutely not. So all the fees are usually come out of the loan proceeds. So the senior wouldn't have to actually write a check. And the community certainly does not have to participate in any of those costs, but they would have the option if they choose to, if they want to offer some sort of incentives to make it more enticing for the senior to say yes to that community or yes to that particular unit that is available at that given time. They have the flexibility to do that, but we keep that control in the community's hands.
And I wanted to ask Mark a question about an article that he was recently quoted in the New York Times that was talking about buy downs. In particular, Mark, I'd love for you to talk a little bit about how this buy down program might benefit our seniors who might be in the market to be selling their home to move into a senior living community.
Sure. So basically the concept, it's called a seller paid buy down. And the concept of it is that during transitional periods in the market, it's not uncommon for buyers and sellers to be a little bit not on the same page about where prices should be. So this is a tactic that sellers can sometimes use to alleviate one of the current concerns, which is higher mortgage payments related to higher interest rates. So the way that a seller paid buy down works is that the seller is giving credits to the buyer, and this could be a senior, it could apply elsewhere as well. But let's take a senior in this example who's going to sell their home and they want to sell it for top dollar and keep as much money in their pocket as they possibly can. But maybe a buyer, because interest rates are higher, wants the price of the home to be lower so that they can lower their overall mortgage payment. So one way to kind of bridge that gap to a certain degree is with this seller paid buy down. So basically what's happening is the seller is giving credits to the buyer that they can use to then pay points to their lender in order to reduce the interest rate. And that usually has more of an impact for the buyer than a price reduction was. So a seller, let's take a $500,000 sale, for example, where a buyer is financing $400,000, they're putting 20% down. So they could give, let's say, an $8,000 credit, which would be a 2% buy down. And that would reduce the interest rate for the buyer by probably 0.5% or more. And that $8,000 that they're crediting in that example to the buyer would be just as impactful as about a $50,000 decrease in the price. So
Wow.
It's a more efficient use of the seller's money to accomplish the goal of the buyer, which is to draw their payment down lower so that they don't have higher monthly payments, but also not giving up any more money that they need to in order to accomplish that goal. So it comes down to just a more effective use and strategy for seniors or sellers in general to be able to accommodate a buyer who's nervous about higher interest rates.
And so do they just do that in the way of a credit at closing, or how do they go about accomplishing that?
Correct. Yeah, it will look as what we in the industry refer to as a seller's concession toward closing costs. And the buyer knows that up front. That's usually negotiated into the purchase contract. So the buyer can choose, if they want to be able to use that money from the seller to buy down their interest rate and get a lower interest rate over the life of the loan. So it's a really effective tool, and it costs a senior or a seller a lot less money than dropping the price by an equivalent amount to get that monthly payment down for the buyer. So it's a really, really great strategy that we're starting to recommend to our seniors and clients who are selling homes while also purchasing at the same time.
Yeah, I agree. It's brilliant. And I think it's also important, though, if you want to be doing programs like that, you really do need to be working with top-notch real estate agents who understand these sort of programs that can help you sell your home for maximum dollar, right?
Absolutely. Yeah. In our industry, we're only as good as the advice that we give to people.
Right.
And those agents or loan officers who don't understand these concepts or just aren't thinking outside of the box of how to solve the current challenges of any market, you're really doing yourself a disservice by working with them, as opposed to someone who might come up with these creative tactics to try to potentially keep tens of thousands of dollars in your pocket, which you
Right.
could then use for your living expenses in your new senior community, or moving expenses to get into that community, or whatever it may be. It really makes a difference where, every dollar that a senior gets out of selling their home, it matters. It's how
Yes.
they're going to pay for their life expenses moving forward. So that's a great tactic to use when a buyer and seller aren't quite on the same page as far as price.
Yeah, I love it. I think it's great. And our dedicated relocation specialists at LivNow are very knowledgeable about that, and are already starting to bring that up to our seniors who are selling their homes, to let them know, they don't have to worry about taking major cuts in their home values right now. There's other ways to go about it. And that's our job. At LivNow Relocation, we're here to advocate for them, educate them and advocate for them. So thanks, Mark. Thanks for taking the time to explain that. Because we'd like to be able to share that information with our communities, as well as any seniors that are taking that into consideration. Hearing from an expert always helps. So
Yeah,
thanks, Mark.
my pleasure.
Awesome. Yeah, well, we are really so happy to be working with the Maimon Group and NJ Lenders. We are so excited about the program that you've created specifically for our clients. Just so our clients know, we will be offering this program through our dedicated relocation specialists, but so we can give them a link to NJ Lenders, Maimon Group, to fill out that online form that Mark referenced. Their dedicated relocation specialists will sort through that with them, give them that direction. And we are really thrilled to be working with you guys. And we thank you for putting together such a great program for us to be able to offer to our communities. I know that they have already started to take advantage of it. And I know that it's just going to continue to grow and be wildly successful. So thank you, Mark. I appreciate everything.
Absolutely. Thank you for the opportunity. We're looking forward to working very closely together.
Ditto.